From Orange County and the campus of Chapman University, this is the Chapman Business Report.
On this edition of the Chapman Report, Pete Weitzner joined by my major domo, Dr. Esmael Adibi. Busy times for him. If you're from Southern California or beyond, you know this is forecast preview time, the 37th annual economic forecast. Dr. Adibi, Dr. Jim Doty coming up at the Segerstrom Center. So let's start with the national. You do a national and then a regional forecast. So we'll devote this segment to the national forecast. Third quarter GDP just came in, 3.5%. It's not the best, but in the U.S., a 300-year-old country.
Since recession, we never got really a high growth in GDP.
Second quarter, we got 4.6.
Yeah, but the first quarter was dismal.
Right.
If you remember, first quarter was negative 2.1% down. Then we went 4.2, then we went 3.5. And if you remember our forecast, by the way, which we issued last November for 2014, we called for real GDP to grow about 2.2%. And we think it's a bullseye, and the
for the year.
For the year.
And there's some disappointing components, so we'll hit those. Exports, because Europe is flat as a whole, and that's a big trading partner. And now as we came on the air, Japan's a big trading partner. They shrank 2.5%.
See, when we forecast GDP, there are four components that we have to worry about. One is obviously consumption, the biggest one, then government, then investment, and finally export market.
And they were in that order as far as contributing.
Size, exactly, size, contribution. Now, export market was weak and will remain weak at least through next year. And the reason, as you mentioned, Europe is still struggling. Few countries are in recession. Even Germany and France are showing sign of weakness. When we look at China, it's slowing down a little bit, but that's no big deal because growth is going from 7.5% to 7.1%. But Japan is big. You know, that's the third largest economy. And if they slow down, it means they're not going to buy as much from us. But there's one ray of hope here because Canada and Mexico, they're doing fine. And those are the largest.
Once we get that pipeline open.
Oh, that would even do it more. But those are our largest trading partners. So they're going to make up for some of it, but it's still, we don't count as export being the engine of economic growth.
I somewhat segued into it. We're not a political show, but there is an economic component to this. What happened in November, so now the Republicans have the House and the Congress. The president will be there for 2 more years. And you'll be asked about this, and I think maybe it was a component of your forecast.
Sure.
What impact might it have, say, on growth?
Nothing.
Because less will get done?
Yeah, exactly. The good part would be, gridlock is going to continue. We had a gridlock last 2 years, obviously. Although, you know, the Senate was Democratic Senate, but they didn't have pure majority. So the gridlock is going to continue. And from economic point of view, we kind of like that. Sometimes when you have, you know, majority.
Well, Republicans, for instance, talking tax reform, which you, and I know you probably
we like it, but I don't think it's going to get done, probably.
Right.
I mean, they're talking about lots. The president is talking immigration. Right. Probably is not going to happen, or if it happens, it would be some, again, artificial, very cosmetic change.
So perhaps to what happens in 2016, a non-event for the next 2 years economically.
I
also
think so.
a non-event, at least in the short term, has been the end of quantitative easing.
That is important piece. See, because when you want to stimulate the economy, there are two components. One is fiscal policy, basically is spending, federal government is spending
which has been negative.
Or reduce taxes. Yeah, it is becoming a drag because the deficit is shrinking, so it's not as
taxes
much of
are higher.
Exactly. But on the monetary side, the quantitative easing obviously kept interest rates down, pumped liquidity into the marketplace, even helped maybe, you know, asset prices, whether it's homes or equity market, and that is stopped. But having said that, that means
it hasn't stopped asset prices.
No.
And rates are still low.
Yeah, but we have to remember, be very careful what we're talking about. They used to print money every month, $85 billion up to last December. Then they started gradually taper it down to zero. However, still, you know, they have a whole bunch of papers. Federal Reserve bought a whole bunch of paper.
Have to get it off their balance sheet.
They're getting interest and principal payment on that, and they're injecting it back to the economy. So it's still, there's some coming from, you know, that side of the equation. By the way, one thing in defense of fiscal policy, you remember when we were talking about the stimulus packages in U.S. and everybody was saying it's a bad idea. I think part of the problem that Europe and Japan have problem because they started the austerity program way sooner
right.
than was necessary. They have to go through that fundamental changes, but they unplug that, and then monetary policy by itself cannot do the job.
We also don't predict the stock market, but you've talked often about the wealth effect.
Exactly.
And it certainly has had a great effect.
That's
the
the
Dow up
consumers.
threefold and better gains on the broader markets as we sit here mid to late November. Concerns there, or justified? Earnings are justified?
To some extent it is. If you look at, obviously part of it was liquidity. Part of it is because there's no yield out there. Everybody's chasing yield, and the stock market is the only place to be. I was getting a little worried because of the earnings. Maybe it's not going to justify it. It looks like earning came out very decent. So to some extent, you could see the stock market is fully priced or at the right price. Now, tying that, as you said, about the wealth effect, consumers are 70% of the economy. And consumers, I think they're doing fantastic. Actually, the third quarter growth in consumer spending was good. I think the holiday season is going to be the best holiday season. And the reasons, multiple factors. Jobs are being created, income is being generated. Although wage growth is very anemic, still you get more
Factor
people.
cited by a lot of dissatisfied voters.
Exactly, but you get more people working, there's more income, and then you have home prices going higher, stock market is doing good, so positive wealth effect, and we just got a tax cut. Look at the gas prices. When gas prices go down, it's pretty much a tax cut because we have more money to spend on other items.
My last issue on the national economy. We sit here now, gas is about $3,
$3.
a little higher here because we have higher taxes. And oil prices are mid-70s now?
$75.
Is there a negative to that, or is that all? I mean, certainly, like you say, that's a tax cut of anywhere from, say, $500 to $1,000 a year.
Exactly, for every consumer. Now, there's a positive and negative. Like
negative
anything
is?
else, the negative is that some of the marginal production sites, especially when it comes to fracking, some of the marginal one, that they depended on oil prices to hover around 90 to 100, those probably are going to slow down production. To some extent, that's going to limit the supply. But if you take that aside, which mostly is going to affect North Dakota and then Texas and maybe a little bit in Colorado and Montana, those areas, for the whole nation, the lower gas prices is a positive factor. So the positive more than offset the negative that is coming from lower oil prices. So when you put all of these together, consumers are going to be drivers for this holiday season and for next year. We talked about export, it's not going to be as strong, but consumer spending is going to be decent, and investment is kicking in. Corporate America is borrowing now because interest rates are cheap,
So
and what they're doing,
2.2 may come in low.
No, 2.2 is for this year.
Right, it's because of that
2.2.
first quarter.
Exactly.
We'll take up the local and the state economy on our next segment with Dr. Adibi on the eve of his 37th annual economic forecast. We'll be back soon on the Chapman Business Report.